CTM. Mic check. 1 2 1 2. Happy Thursday, everyone. Nice to see you all jumping in over here. CTM laying out and bringing that vibe. Regardless of what's happening in the markets, there's that tranquility, that peace. Yamoto Queen. I think in a little bit we'll get into a little bit of feedback, right? So Yamato Queen, you're definitely someone who has just joined the fold very recently, a friend of Ace. Ace has been with us throughout for a long time now. And that experience for sure is irreplaceable. It takes time. But as far as positioning, I mean, we know where we'll get into positioning in a minute. Well, Yamato Queen, every word today that is shared is for you. But you need to embrace it. You need to let go of thinking that you are going to take risks to try to go ahead and cut corners and make up for anything or bad mistakes or poor choices in the past. The best thing that we think that could be done is to go ahead and execute off of what we have deemed to be foundational, right? If you're out there and you're just speculating, well, odds are you might have a few good streaks, but overall you're going to end up on empty. We don't want that. We want you here with us. We want everyone at the top of the summit. That's for sure. All right. So we're looking here at the halving chart, and looks to me like, does that look like another nice, massive bear flag? It reminds me of this one up here. It reminds me of that one over there. And that thing dumped down hard, by the way. And a lot of people look at the recent low, and then we had this beautiful 50% move up. It was beautiful to be able to participate. And, all I'm saying is that if we were to break down lower and take out the low, it could be a big move. This was a big move to the upside. It could be an equally big move to the downside as well. Do not get comfortable at any point in time. Now, hopefully the low is in. It could be. By the way, we have a big day tomorrow. We had a big day today. We had unemployment claims higher than expected, and you saw the initial reaction off that was like a little bit of a reprieve. Not on crypto, as Chris pointed out. This could be a Silvergate thing. It could be a scared of the space type thing. It could be, did you see Jerome Powell's soundbite saying if the CBDC is launched that, look, you can't trust anything they say. They're saying that, well, there's no plans right now. Okay. Do you know how many hours they've spent, how much money they've spent researching, building beta programs, Fed now to launch this year? He said that any crypto without any type of intrinsic value would go to zero. And likely that's correct. I mean, they're going to go to zero anyway over time, but Bitcoin does have intrinsic value. Look, there's also massive value, different type of value on Ethereum, and it's in the network and those network effects. But what was I getting at? Oh, that you saw here the slight reprieve in equity markets bouncing, giving up those gains I do believe. We'll check in on that in a second, right? But we have the big event tomorrow. We have the non-farm payrolls. We're going to be watching not only for the headline number, we're going to see if this was an anomaly, right? If we see another beat, that's going to pretty much probably tie in a 50% basis points with the one asterisk that we have on Tuesday, the CPI. That could be a game changer. And we're looking at the unemployment rate, and we're going to be looking at the hourly earnings. If this goes higher, that's bad news bears. If it winds up dropping, that will be quite good. Let me see what it looks like. I think, to me, intrinsic value means that Bitcoin is produced through energy, through proof of work. I think that's where the intrinsic value of Bitcoin lies. Now, that's why I made the differentiation between Ethereum, and I believe that its value lies in its network effects. It's two different things. But for Bitcoin, for me, Michelle, if you have a different opinion, I'm always interested to hear. But it is that energy through that proof of work being produced into something that is digital with that scarce supply, that combination of that permissionless network is where the value lies in Bitcoin. Now, I want to see if today's data has changed what the odds are for the probabilities coming into this month's Fed meeting, and it hasn't changed it at all. But sure enough, after we see the non-farm payrolls and then next Tuesday's CPI, this number will be changed one way or another. It's a very uncertain market right now. The Fed has done a fantastic job, by the way, as you started seeing in 2023, not just Bitcoin here, all risk really ramping up and undoing much of the tightening that has taken place. They've done a very good job recently with their verbal tightening. And it might not be verbal. There could be action behind it. I do believe, and all of us believe that, again, if the jobs number comes in strong, if the CPI comes in higher than expected, then there could be a 50 basis point hike. And then we'll have to take in that and deal with it as it comes and see what type of communication is presented. But at the same time, the markets are very uncertain. This could all change drastically. Coming into after next Tuesday, we could be potentially back at 50-50. That's one of the options that could happen. If that happens, I think that Powell and team would like that. They don't want the markets front running what is eventually going to happen. And what is eventually going to happen, as we saw the Bank of Canada after 8 consecutive rate hikes pause. We've seen Australia with that last dovish hike saying that they feel that inflation is coming under control and yada, yada, yada. The Fed Reserve in the United States is a lot closer to actually not pivoting towards rate cuts, but towards stopping the rate hiking cycle. Let's see where the markets currently have priced it in, if it's in June or July. Well, I guess it's right around June or July, right? And it looks for sure by the end of the summer that we should see a pause somewhere between, it looks like right now, June or July. Now, that doesn't even mean that it couldn't happen sooner. If the Fed does come in with a 50 basis point hike, that could be something that actually allows for some type of like reaching the terminal rate a lot sooner. Maybe that's what they want. I really don't know. All right, let's keep going. Bum 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 bum. And I think gold is very similar to Bitcoin in so much as it takes that energy to go ahead and get that out of the ground, right? To get it out of the ground. And it's not as scarce as Bitcoin. That's why the next halving is so important, and everyone after. Right now, actually, gold is more scarce than Bitcoin. That's going to be changing very soon. Thoughts on the inverse correlation between the 2-year yields and Bitcoin? Also, as the Fed seems to be following 2-year yields virtually guaranteed for it. Well, Simon, the 2 year is going to be repriced just as much as these probabilities are repriced by Tuesday, after the next 2 most important data points before the Fed's meeting. So we'll be watching what happens then, and then be able to assess what our expectations are. And anyone right now is just guessing. It's the Fed truly is data dependent. And we'll see what the data says. Now, that doesn't mean, for example, here's what I wanted to share. I guess we're just on some type of Thursday tangent over here, but if you noticed when we started seeing all this, um, like people jumping on into risk, what really put the nail in that was last month's non-farm payrolls, right? And we've looked at how that caused the dollar right over here to bottom. It also caused the yields over here to bottom. Now, look, I'm not putting on any type of conspiracy hat at the moment, but it is true that powerful people do conspire together. And it is possible that things were getting a little bit front run a little too aggressively and quickly, and that they had a lot of people don't believe that last report, that last jobs number saying that I don't want to fraudulent. I don't know what to say about it. Fake, and but that caused in the next 30 days a massive amount of retightening and repricing. So I think that the Fed is happy with what's happened. Contrary to popular belief, I don't think the Fed wants to crash the economy. Are they looking to slow it down? That's for sure. Are they looking to bring inflation back down? That's for sure. Here's the thing. If they do make a mistake, if they do tighten in so much that it causes things to break, they don't really have a choice but to go ahead and inject more liquidity into the market in order to keep the whole system alive and going, right? So that's the problem, is that we're watching right now this impulse of inflation that is beginning to roll over, and the Fed wants this momentum to continue. They don't want to break things, cause another injection into the system to keep it afloat, and then have to see a bigger impulse, which is likely coming. But the whole thing is that we're not trying to have that second impulse come as quick as possible. Likely, my whole thing has always been the Fed tries to prolong the cycle as long as possible. And that's what's happening right now, is that they are trying, they're still in the tightening portion. They haven't gotten to the pause portion, and they haven't gotten to the rate cut portion, and then they haven't gotten to, they have to go ahead and restart QE portion, and then they're going to see that's going to last until we start seeing inflation out of control, and then they've got to start raising rates again. And that's why I say my expectations over this decade here that's in front of us is that we're going to see quicker cycles, quicker Fed cycles, the amount of time between and look, you've seen that happen. This is one of the quickest, sharpest rate hiking cycles in history. So you're starting to see sharper cycles, and I think they're going to be quicker in so much as that we look between 2008 when QE was first launched. It took to 2020, 12 years for things to break. I do not think it's going to take another 12 years to see the restart of quantitative easing. Actually, I'm measuring cycles here from quantitative easing, not from QE1 to QE2 I'm the full cycle. And the next time that happens, well, it's looking like that the Fed is setting up for things to break. And when they break, that's anyone's guess. But if that does happen in sometime in 2024 into 2025, somewhere thereabouts, could be where we see the next move to easing. And I'm not talking about rate cuts. Rate cuts will cut. That's part of the cycle. So I think that people are, because you remember, rewind a year ago to last March, as soon as they began hiking, people were talking about and ready for things to break. And then by June, we're surprised that things hadn't broken yet. And we're like, no, wait a second. The Fed is not trying to break things. They're trying to prolong the cycle as long as possible. And one more thing to add, because it's all very important and fascinating. Another thing to talk about is that last time things broke, I wish I had a chart to share with y'all. Last time things broke, and I'm not talking about this. This was global lockdowns. This is has there ever been a time in modern history where the whole world came to a screeching halt? No, there's not. A lot of people look for things to break like that. That's their expectations. When things break, the markets will be in a free fall. You'll see the indexes limit down every day. And then when the pain gets too great, Powell's going to come in and announce a return of expansion of the balance sheet and quantitative easing program. And then you could buy and then ride it up. Now, let me point out, in real time, it's not that easy. We have all these videos on the public channel at the time, each and every day. And not only the way up here, not only the whole way down, and then in between March and April, second week of April, it's trying to stay on the right side. By the middle of April, it is forbidden, tongue in cheek, to sell anything. This is uber asset inflationary, and it all began. But if you remember, during this period, it wasn't into the summer of 2020. And by the way, you were seeing equities making new all-time highs by then, that the whole macro expert crowd then caught on to what was happening. And this whole time, they were looking for insolvency events. They were talking about the stages of the breakdown and how this was just the first stage, and we were getting ready to, and people were worried about taking out the lows. That's what happened in real time. And if you go back and you watch with CTM and the way that we handled it together in real time, it was beautiful. It was really beautiful. But when things break was over here in September 2019. September 2019. Pull it up on the board. It's right in this area over here. This is when the Fed stopped raising rates. This is equity's response. By the way, Chairman Powell, Fed Chair Powell, he said in Tuesday's testimony, he said that when it comes to the tightening cycle, that the rate hikes actually are more effective than quantitative tightening. He said it, the chairman of the Federal Reserve. It's something that I have been putting out there, proposing to the entire community, right, for a long time now and consistently, that rate hikes trump quantitative tightening. We only have one cycle to go off of. That's what happened last cycle, but he said it now. And this is when things broke. Equities were at new all-time highs. Bitcoin had made a 4x off of the low. And all of a sudden, the overnight repo market broke. This was, people think things breaking means this and this. No. Things broke right over here. And if you pull up the balance sheet of the Fed, right? I'll put it on a new plane below. You can see right over here where I'm pointing things broke. This is when balance sheet expansion started again. You could see that this is the market's reaction to that. This is an anomaly. This is the world being locked down. Now what about Fed funds, right? Fed funds. None of this was planned. I didn't know we were going into a macro session today, but it's worthy ahead of what's happening. People keep telling you that when they begin cutting rates, that markets crash. I hear it everywhere. I see it everywhere, and it's talked about as if it's the truth. Well, over here you have 3 rate cuts. What are equity markets doing during those rate cuts? Jordan, they're melting up. Why are they melting up during rate cuts? That I was told differently. Well, the reason they're melting up during the rate cuts is because the balance sheet is being expanded. And just as we talked about that rate hikes are more important than quantitative tightening, balance sheet expansion trumps over here the rate cuts. You, I, or no one knows what is going to happen during this cycle. When things break, we do not have any idea what that looks like. Here is things breaking because of global lockdowns, and you all lived through it. I don't need to tell you what it was, right? Do you think that's going to happen again, and we're going to see some type of crash like that? I don't know. Anything's possible. Or next time something breaks, is it going to be that, I texted my whole family that day. I was like, it's happening. It's happening again. And then you could see the balance sheet expansion starting, and then they go ahead and they cut rates to help ease the economy. And look at the response of the markets. I don't know which way it's going to be. And it's very dangerous, everyone out there pretending like they do. Who knows? This time is different. Each and every time is different. Let's make sure we stay in front of it. And that is our view today of the markets. Let's look at what's going on CTM 2.0. And Eric, let's talk a little bit about some of these questions over here. Eric, what about the pause? That is next, not the drop. Look at what the markets do during the pause. Eric, I'm so interested. What happens the next time the markets pause? If we see the Fed, when we see the Fed move towards a pause in interest rates, the market's reaction is everything. And it's going to be largely dependent on what's happening with inflation. If we continue to see during the pause CPI coming off, that is going to be a good sign, and likely, depending on the degree that the inflation's coming off, you will see the reaction. We looked at real rates in conjunction to Bitcoin, and for ever since 2018, that the correlation has been completely inverted. Forget monetary global liquidity and everything else. There's no other higher correlation than yields. And what's happening with inflation is going to matter. If inflation is coming off and coming off hard, you are going to see, when we get to the pause, I believe, a substantial rally. Likely equity markets making new all-time highs. I don't think Bitcoin. That's not what happened when last cycle in Bitcoin. It could happen. I don't think so. I think it'll be sometime further out, but it could happen. I don't think so. I think equities will be, though. And if we are not seeing inflation roll over, and worse, we are seeing a resurgence of it, then at the pause, there's a good chance that equity markets roll over. And that's what I'm saying. Like, no one could tell you what is going to happen. But what we could say is, well, that is a really important moment in the cycle. And watching the market's reaction and what is happening, that's a bigger tell. That's more important than us being like, we're going, up only or down only. How can either one of those camps know ahead of time? You can't. And just like you could look at, and I've seen some charts recently showing equity markets during 2000, 2008, breaking above their bear market trend line and then rolling over substantially. Well, that could happen. That's why we have TA to watch what's happening, right? And we will do our best to stay on the right side of it if that's happening. But right now, it's also, we could see the inverse happen. And by the way, in just the 1 week, everyone's interpretation of what's happening is going to be drastically different. It's going to be drastically different after we get this month's non-farm payrolls and this month's CPI. So we'll just go ahead and we'll take it. Mad Dog. So do we talk about the CME trading on the daily yesterday? Nope, Jabron. So we have some elegant solutions for CME trading. The thing about it is that it requires holding over the weekends. None of the strategies we've been able to develop are catered towards letting go of that position over the weekend and then reopening it up. It is potentially possible. That would take some type of effort from the community and those that are interested in doing it. But the only strategies that we have, whether it's traded on the 8-hour or the daily on the CME, they actually have even better returns over the last 3 years than looking at Bitcoin, right? You could look at Bitcoin over the last 3 years and I could say, wow, this is showing right now the last 12 months. No, not even. This is 1 year. So Bitcoin on the 8-hour from a year ago today showing 100% return. Ethereum 265, and Cardano 100%. So if you go back though and you're looking at what this has done since 2020, right? And then compare it to the CME. The CME return, I believe, is a little higher, and the drawdown, I believe, is a little lower. But that requires holding over the weekend. So we could talk more about that on the Discord if you have any questions about that. And then, boom, ba-dum, bum, bum. Wolfgang, Bitcoin slowly grinding further down. Next stop, above 2100, at least good for CTM 2.0. The current Cardano open position. Cardano holding an open position right now, 4%. Ethereum and Bitcoin remain on the sidelines. You could really see it like this. When you look at these three charts, right, you know that we had the run up in January, right? By the way, how funny that Bitcoin and Ethereum participating, CTM 2.0 on that, and Cardano not. Cardano did not take one buy entry all of 2022, just executing off the short side. Its first buy entry in 15 months came late in January. And you can see now that Bitcoin, Ethereum are still on the sidelines, but look at this. Do you see how this is rolling over? And Cardano executing on the short side. You can visualize it like this. This is showing the rolling over that's occur. Here you can see where the price was, where price is today. Come back to the other side and you can see it. And there's more of an arc to it. Look at the price of Ethereum today to where it was. It's flatter. There's less of an arc. And the same thing with Bitcoin. There's less of an arc. Now, Bitcoin and Ethereum do seem to be rolling over. And they're actually both just as close to going ahead, and that's a hard view. You can't really see well. Let me do it like this then. Let me just go back and show you like this. And you can see that actually Bitcoin it's almost now just as close to going long or short. It's still a little closer to attacking on the long side. And if you saw price actually come up, right, and you saw price come up about $1,700, huh? So let's say about 23. I'm looking where that price would be. Where right now it's right above the arrow. You would see Bitcoin on the breakout of this contraction. I don't know what to call that. It looks to me like momentum's rolling over. That's the clearest way I could put that. I see over here also this bear flag drop down. Another. We're definitely pulling back over here. I like viewing this chart and the way that we viewed it, and it's a very clear breakdown that's occurring. Someone pointed out 21,000. I just want to look very closely from a discretionary lens of where that next support could be. So I don't know if we would put it off of the resistance here or the touch up over here, right? Or actually like this one. This is the resistance. These are the closes. This one is the one that I think that likely has a good opportunity of holding as support. That's coming down all the way towards 20,000. It could be off the top one touch over here though, right? You could see the close of the bars here, the one touch into that. That's coming in right now. Someone said 21,100, right? Right around that level, right? A little bit lower. And it could be, I don't know. But right now we're dropping. We're on a breakdown, right? So that means until you have any type of repair, there's no need or to be looking on the long side whatsoever. What does a repair look like from a discretionary level? That's getting back above this broken line of support. That support is right, that same angle. And or it could be a buy impulse occurring. So a buy impulse would need to be above this line. That is right where CTM 2.0 would be entering on the buy side, by the way, if that were to occur. So you could see that right now, there's no reason to be looking at the long side. Momentum's rolling over. And to get back on the long side, you would need to see some type of up movement. Unfortunately and or fortunately, though, it does look like that CTM 2.0 would be selling into that support. That support we just looked at, right, from... I thought I could bring it back very easily, right? that support I just looked at going like boom, bada bing. So in these areas over here is one more. No, I don't want to enable dictation right now. We're in the middle of a presentation. I don't want to enable dictation right now. So it looks like CTM 2.0 would actually be selling in this area down over here, right into support. And that will be fun if that happens, because then we'll be able to all second guess what CTM is doing as it sells into an area that we see discretionary as support. But we all know that we could go back and we could look at, you know, how she performs, whether we start in 2018 till today, right? Drawdown, return, 2019, like return, drawdown, 2017, right? Return, drawdown, 2016, return, drawdown, 2021, whatever, right? And it does funny things, but, you know, if you think you're going to outperform it, well, keep going. I encourage you, but that right there is great. That's what I said. I was going to be really talking to you, and each and every word is for you, for sure today, Yamamoto Queen, because again, being someone that is newer to the community, you're surrounded by people who have a massive amount of experience together, right? And so our understanding of not only every single aspect that goes into being a successful trader is for sure different, but we want to bring you with us. So that's what we're watching today on the 8-hour time frame. We continue to see Bitcoin and Ethereum out of the market and on the sidelines. By the way, now when they stopped executing and been on the sidelines, knowing when to be out of the market, absolutely priceless. And we see that we have the beautiful dance in so much that Cardano has a feeler out on the short side as people are sensing this weakness. Just a reminder right now, as price is running sideways. Running sideways means that the blue line at the top is the new account all-time high. And right now it's in drawdown before it makes new all-time high. I call it running sideways. It is behavior that happens always. Look at that long period over here. This is before the bull market breakout. Look at that long period of sideways. Now, just because Bitcoin was doing that doesn't mean that the others were. Let's go ahead and get that at the same time so you could see what they were doing, right? So I could see over here that we see Ethereum making a new all-time high, why Bitcoin is not. And also in that area, look at Bitcoin at the top in blue, just running sideways here for that long period of time before it exploded, right, on the launch of the bull market breakout. So consolidation, expansion. And during that period, though, you could see right over here, if you look at the very bottom, though, Cardano was taking the torch and it was making those new all-time highs. Why Bitcoin runs sideways. Sometimes they're all running sideways together, but the whole period you go back, as far as you go back in the history, you do see two things. You see a consistent up and to the right, but throughout that, you see long periods of sideways. Do you have the fortitude to be able to trade through that? Are you taking unnecessary risks and over-positioned right now because you're trying to make up for lost time? Or do you have that type of patience and discipline required in order to be an elite trader, in order to be able to go ahead and summit the highest mountains? We together work together in order to help everyone along the way, because there's nothing easy about it. There's nothing easy about it. Now, I think that the most difficult thing is having a winning edge and developing a winning edge in the market. And I think that's why aspiring traders spend the least amount of time actually developing that edge and the most amount of time placing trades and then watching markets tick. Because that's not there's nothing glamorous about putting that type of work in. But that's what we've done, and that's what we do here. By the way, there are many things continuing to go on within CTM. Wes on the Summit team has brought up potential. This is ongoing now for quite a while, right? It's a process. It takes time. About system design and Flavorous Frav looking to spend lots of hours jumping in off of that idea. You know that the trade management layer continues. I'm not going to get into all that right now. No, you don't need any of those things, my brother. You need to get out of the market, and you need to begin executing mechanically and systematically. Right? All right. So we see over here, what's going on with stocks, right? By the way, Tesla off with an enormous start to 2023. As we began looking in stocks, this cannot be, hold on, there's something else I wanted to say. I know that we've gone off here on a couple of tangents. So quite unexpectedly, actually. But we're looking at the daily time frame today, and we see that we're looking at Cardano and Ethereum holding open positions. They're barely falling into profit right now, and Bitcoin is on the sidelines and still on the sidelines. So we need to really see this roll over. 2023, beautiful. I mean, so with the dollar sign hitting on the head over here, like a warrior. Yamato Queen, you need to think of yourself as a warrior. And a warrior cannot be emotional. And if you are trading without a plan and you are trading without proper risk management, then there's no other way but to be emotional. We want to get you there. Know thyself. Know thyself. If you're in a position that you don't belong in, there's no way that you're going to be able to get right. There's no way that you could get right while you're in a position that you don't belong in. And it's like holding a lotto ticket. Like you think that like you might have a chance to win, and you might. It's possible, but you're gonna lose. You have to do this systematically. You have to do it really intelligently. It starts with getting out of anything you don't belong in. Then that self-reflective time to know themselves. Lucas put in every single session for 2 years. And you like, there's so many in CTM understanding the value of what has been built that spend that time in preparation. You have to take this as serious as it is. There's no other way about that. All right. So what else was I saying over here? I wanted to get into something, so I'm going to find it into stocks. I heard a lot of people right now, a lot of macro experts right now have begun talking about why they believe the best investment right now is short-term duration treasuries yielding 5% a year. Even though they know that does not outpace the rate of inflation. You have to sit with this for 1 second before we go any further. And we're going to talk about stocks. Some of the brightest minds in the world, some of the brightest people competing in the investment markets, they believe that their best strategy that they have right now is to park their funds in short-term duration treasuries collecting 5%. Now we know, when you could look at what and Yamato Queen, this perspective here is important. You see off the start of the year, right? You could look back and you see in 2023, we looked at what 1 year's performance was earlier. Just look in 2023, Bitcoin off and running start with a 24% gain 2 months into the year. Ethereum, 2023, she's about break even, up 4%. There's your 2-year treasury at the start of the year, right? Cardano, slightly off 8%. Add them up. What's your plan? What about stocks? Some people think that crypto is really risky right now. Tesla, since January 1st, 38%. Now we have these, TQQQ. This is trading the triple Qs on 3 times leverage. Insanity. Over here, you have the inverse for when you go in short, right? T triple Q to start in the year, 14%. Minus 3% over here. So it takes us back down to, add them up together, about 10%, 9%. FNGU has been absolutely insanity. Starting the year off over here. Let me come back down to 2023. 72%. How's that 5% in short-term duration doing? Right? Coming up to on the short side over here. Compound that with an additional 6% on the short side. You got to have a plan. You have a plan. You're part of the team. You gotta make sure that you give everything to getting it right. You have to have a moment where something changes into you and you decide you're going to do whatever it takes. The hard part, CTM has spent massive amount of time building, designing. The amount of work cannot be. Those that are here every day for 2-3 years, they know and understand. And we keep moving and we keep going forward. But you, if you're just joining us, you're at a disadvantage. You do not have all that time and experience. And you might need to learn the hard way for yourself before you're able, and if it's not too late. If you get wiped out, it's too late. You can't. Compounding is one thing. That time is another ingredient that's needed. You're wasting time. All right, CTM. That's it for today. I hope you all have a beautiful day. And we'll do it again tomorrow. That's for sure. All right, everyone. God bless you. And I'll see you all on the inside on the Discord now. It is the hardest. Focus, discipline, taking it serious. Really spending that time. You think well in the shower? Go take a shower. And decide what pieces of the puzzle you need to put in order to be executing off of what CTM foundationally does over here, and then start thinking long term. It's why I tried to show you that there are periods and many periods where, look at this on Cardano over here. Look at this from May. This is 2022. From May to January, running sideways, really no new all-time highs. Now, thankfully, during that time, you see Ethereum making a new all-time high once, twice. That's it. And Bitcoin over there also once, twice making new all-time highs. But you gotta be a warrior. There's no other way. Oh, that's it. We're going out with the head snack right now.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip a matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. Honestly,
Rick.
Trading and investing, drinking the coffee while
That's
reflecting
dedication.
on the blessing. The markets are not crashing. The prices might be slashing just to pretend they're in fashion. See the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau.
Look at this wisdom.
Boom,
Y'all
it's a
full of
taco
wisdom.
day.
Look at this wisdom. All right, y'all. I'll see you later.